Fantastic. Well, thank you everyone for joining us today. We're going to probably go a couple of minutes over and make sure, and then we'll do some quick introductions and we will get the conversation started. So my name is Aite-Novarica. I'm with Mitek Systems. You have joined us today and we're really happy to have you for one of our checked event webinars. Obviously, very specific and timely topic around how banks can turn the tide against check fraud. In particular, we know that this topic has become of more interest recently. So we brought in a couple of really impressive guests today. Trace Fooshée will be joining us from Aite-Novarica. He is the strategic advisor in A&G's fraud and AML practice. So Trace, thank you for joining us.
Pleasure to be here.
And then from the Mitek side of the house, we've got Kerry Cantley, who is our VP of Digital Banking and Strategy, also previously the SVP of Global Technology and Operations at Bank of America. So great to have you on as well, Kerry.
Thanks, Adam.
So one final piece of housekeeping before we kick off, which is just to let folks know that we will have a question and answer portion of time towards the end. So if you would like to ask any questions, please do put them in the question section, not in the chat section. We'll do our best to try and monitor both, but reasonably the question section will pop up and that'll be a much easier prompt for me to pay attention to. So with that, we will kick off. I will just say, again, mentioning check fraud being pretty much one of the more timely topics that we could be talking about now. So having planned this out in advance, I'm just, sort of amazed. I think I saw an article even yesterday in Business Insider where now the post office is literally telling people not to send checks through the mail. So could not be more timely than that, article coming out. I think, for both of you, I guess one of my first questions and one of the places where I think the conversation will really get rolling is, we know that check fraud has been on the rise probably since 2020, and a lot of that came around from, the stimulus checks that were coming during the pandemic. But I'm kind of curious, with the economy being also in flux, are we going to be in a recession? Are we not going to be in a recession? Those types of things. What other roles have we seen, or what other things are really kind of bringing about this rise, or this old is new again with check fraud? Maybe Trace, if you can tell us just from your standpoint, I know you talk to a lot of different organizations, kind of what you're seeing.
Sure. So in doing some research for a recent report on trends in fraud for 2023, it became pretty apparent that check fraud was a surging topic. And there's sort of an old axiom among fraud professionals that when the economic conditions deteriorate, fraud tends to go up. Now, curiously, that's a bit of I don't want to say it's a wives' tale, but it's a common belief that's actually without a whole lot, or at least until fairly recently, it's been without anything really substantively scientific or empirical behind it. So I went out and searched for some evidence of this among criminologists, and sure enough, that this topic has been studied by criminologists for the better part of the last 20 or 30 years, and no one has, again, until fairly recently, found any really repeatable or reliable correlation between, say, economic conditions and criminal activity. So I did come across a couple of criminologists, though, Rosenfeld and Farango, who said effectively that the reason that there hasn't been a whole lot of consensus support of this notion is because we've been using the wrong measurements. So they proposed this is not really about using objective economic indicators like unemployment or productivity or something of that nature. It has more to do with perception, or the consumer's perception of economic conditions rather than objective measurements of economic conditions. So they did their study and found that something called the Index of Consumer Sentiment, which is measured by the University of Michigan, and has been measuring consumer sentiment around economic conditions going back to 1960. They revealed that was remarkably predictive of criminal activity. And if you look at the Index of Consumer Sentiment, it hit an all-time low in August of 2022 of around 52, somewhere around 52, I believe. That's even lower than it was in the energy crisis in the 1970s. And pre-pandemic, it was averaging somewhere in the 90s. So in 2020, it took a big nosedive. It recovered a little bit in 2021 before taking an even more significant nosedive in 2022, where it hit its all-time low in August. It's rebounding now a little bit, but it's still around 59 as of May of this year. So we're still kind of in unpleasant territory, I think, if again, Rosenfeld and Farango are correct.
Okay. I mean, that's a very interesting correlation that, you would think typically it would be tied to a very specific and easily measurable thing, but sentiment makes more sense. How are people in the economy feeling about it? And maybe that gives rise to more citizen fraudsters or things like that. I'm curious, Kerry, I'll ask you sort of similarly. We do know check fraud is on the rise, right? I think there were 680,000 reports of it in 2022 versus like 350,000 in 2021. So I mean, literally doubled. Why checks and why now then? If sentiment is down, that's a good indicator, but what other things are causing checks in particular to be such a hot topic for fraudsters?
Well, checks is typically your path of least resistance, right? So there's variation in the check. Your access to check information is a little bit easier than it would be maybe say in the other rails, right? I can go to someone's post office box, I can drive by their mailbox, my access to the information and ability to print a check is sitting right here next to me. So, access is one thing. It's simple. It's not overly complex. I don't have to recreate a credit card or any of that. I can just use a blank check, get, any type of data off of a bank website or a customer's information, and pretty much mirror that and use that check the way that I want to from a fraudulent perspective. So path of least resistance is one thing. The other thing is around the check fraud and the ability to detect check fraud is complex. There's a significant amount of variation that can be done to a check, even if it is a good check, to manipulate it. So the variation also drives, right, that ease of, alteration to do something if you intend to, create check fraud. It's quite easy, right? I can take a $10 check and I can make it 10,000. I can, steal someone's checkbook and, with pretty much ease, I can write, checks to quite a few people and have them walk into other institutions and, try to cash those checks. So variation, path of least resistance, some of those things, right? What's old is new. Social media, your ability to sell data is a lot easier than it, has been. And I think that actually got proliferated during the COVID days. So, information is as fast and quick to access, and your ability to get that data is a whole lot easier than it ever and has been in the past. And then I think the other thing, right, when you think about factors that are going on that maybe, driving some of this is just your ability to actually detect, prevent it, or even close the gap on fraud when it comes to repeated fraud, bad actors, right? So lots of people playing in the fraud space now as actual businesses, where your ability for law enforcement or even the challenges that the post office has with postmasters, their resources are declining for actually helping to take the bad actors off of the street and stopping the proliferation of fraud. So some of those things I think are driving it. But I think that the quickest and easy one is, what's old is new again, and check is easy. And so you've always got to be very fungible to be able to detect the next variation.
Well, yeah, and what's interesting, so you touched on it a little bit, and I think this is kind of one of those questions that I already had percolating, but it does make me curious, right? The technology piece of it, because, again, what's old is new makes sense, and you gave those examples. I mean, I think we've all seen sort of recent news stories about postal carriers being, held up at gunpoint and some of those types of things. But I'm wondering if there are other things in the technology landscape or advances in technology that have changed, what financial institutions are seeing or experiencing, things that have made it easier for fraudsters. I mean, you kind of touched on marketplaces and social media, but Trace, are there other things from your standpoint where technology has sort of changed why check fraud is now the path of least resistance?
Well, so two things, or maybe two thoughts. The first is to kind of build on what Kerry mentioned about social media, because I do think that when I look at sort of what's changed and what hasn't, it's not like social media hasn't it hasn't been around for a long time and hasn't been used as a tool for disseminating stolen, personally identifiable information and other credentials and account information, sensitive information. That has been around for years, but I think what has changed is sort of the severity and the frequency and maybe the types of information that are being shared on social media. So it's not just the sensitive information that's being distributed, it's tutorials, it's all kinds of success stories, using the term in quotes here, of how fraudsters and criminals have managed to do this, and how easy it is to do. And it's all of these sort of how-to kits are getting amplified in a manner that maybe they weren't quite as much. So I think that's one of it. In terms of, on the other thought I had with regard to sort of the technological side of this, is maybe a little bit more so on the detection side of the house. Check fraud has always been around. It's always been a challenge for financial institutions to detect and prevent, and they have done quite a good. They've invested in it in their capacity to detect and prevent check fraud pretty consistently. I would say going back forever, but I would also say that there's not been a great deal of innovation or energy in that part of the market. And the reason for it is because there have been a lot more challenging problems to solve in fraud, namely things like application fraud and account takeover. And certainly now scams are top of mind for a lot of fraud executives. So it's difficult to put this into words thoughtfully, but I think the truth of the matter is that it's not been a really high priority investment for a lot of financial institutions over the years. It's certainly picking up quite a bit. In other words, when we measure how fraud executives are prioritizing investments, check fraud is traditionally, conventionally, over the years, when you look at it, it's been at or near the bottom. And that's largely been because it's been viewed as a kind of fraud that's been relatively well controlled. In other words, it's not that it's gone away, it's still there, it's still an irritation, it's still a problem, still a loss item, but it until recently hasn't really kind of come out of the basement as a real significant and substantial problem. Now that it is, obviously we're seeing an uptick in how fraud executives are prioritizing to invest in this, but it's still not, I would say it's still fairly middle of the pack.
Really?
When you stack it up against a lot, that's a big improvement over where it has been, historically, but it's still not number one, number two, or number three.
Interesting. And I was actually in New York City yesterday at a Transform Finance event, and it was, I will admit to your point, it's actually one of the first times that I've heard several of the folks that I've talked to bring up check fraud as sort of a topic proactively, without any sort of prompting, without anything else. So it does seem to be getting more attention, but it's interesting to hear that, part of the reason that there hasn't been so much attention to it is that it has felt like it's a well-controlled problem until more recently, and the problem is growing. I think, one of the other things, so I'll try and tie it back to something that Kerry said, and just ask you, Kerry, again, we've seen those stories about postal workers being robbed, those kinds of things, government responses, like I mentioned with Business Insider, sort of, giving advice to the Postal Service to say, hey, don't send checks through the mail, those types of things. But to Kerry's point about, it being well contained, but then the government stepping in and starting to say things. Are there things that banks can now do to sort of mitigate the risk on their side? Because obviously the government will take steps to try and protect their employees and sort of protect things on their side, but a lot of that is just advice to consumers. Hey, don't send checks through the mail, that kind of stuff. Are there things that banks can do to kind of make this type of fraud less attractive to criminals?
Yeah, I think there's two things. Right, is, there's a lot of payment and emerging payments out there, and they've got their own challenges. So, as banks are challenged with how to educate my customers on what's the best rail for them to use for payments, and how their money works for them, whether that's in a real-time payment or a check or ACH or whatever those things are. It's a complex landscape. Payments have different requirements depending on what you use, and your consumers and your customers, they just want to pay somebody and they want to receive money. So, so there's some consumer education, right? There's some availability there that banks always have to and need to continue to consider. We know that we've been saying, right, check is going to decline. It is continuing to decline. But actually, when I was reading some of the data, the average check from a dollar perspective has actually increased. So while checks are declining, and that's probably because your commercial and your small businesses and those types of institutional checks have not gone away as dramatically as the industry, but consumers are writing less checks. But because checks are still here as a source of payment, you definitely want to kind of think about, how do I up my game on prevention and detection and find those partnerships from a tech perspective that can bring new technology, right, to play? And, so for example, bringing in compromised data like we're doing, and providing new signals associated with the check itself that can be used both on the check side and then, across broader, like you were saying, Trace, everything's connected, account takeover, all of these things. And a bank always has to balance that for a customer. So how do you do that? You do have to make some investment. I think, checks are going to continue to have a long tail. How long that tail is, no one really quite knows. But do you want to continue, to have that pain point with your customers? Probably need to invest a little bit in prevention and detection, because they're going to look to you as their institution to protect them at the end of the day. But education is important, engaging in the consumer, thinking about your customer experience is also absolutely critical. So where in the process can I put fraud detection that maybe I haven't thought of before? So is it real time within line of mobile? Is it, something different in your experience at the branch level, and, all your different channels, because they're all varied. So kind of thinking about fraud maybe with a new lens of, how do I spread kind of the prevention and detection across my, processes to help my customer. And then at the end of the day, if there's a customer experience, we've all read those articles, right? I mean, it took me 9 months to get my money back, and I can't pay my mortgage, and claims processes are difficult. Customer experience is something that probably needs to be considered when you think about losses and investment as well, and what does that really mean to the customer. So, I think it's really important to invest in protections at the right place, consider the upgrades where it makes sense, because you are having to balance all of those different nuances of protecting the customer on onboarding and then loans and credit card and all of those things. But you got to be smart, nimble, and agile, or have a partner that you can, right, that can be smart, nimble, and agile with you, because your fraudsters are always changing, right? They don't have regulatory compliance requirements. So those are other things, right, around this that really need to be considered. But also, when you have the data, communicate between institutions. Communication's key. And then to your point about making it not attractive to criminals, is when you start sharing data, and because your pain is going to be the next institution's pain, however you do that, right, and protecting your institution, they can't find all of the holes, right, because that's what they're looking for, is that next institution to hit. And then partnership with financial crime, type of engagement, whether that's FBI, local law enforcement. I think there needs to be a tightening of that. where it makes sense in providing that data. So a couple different answers to that question, but you've got to really think about it all if you don't want to be attractive as an institution to someone that may be wanting to take advantage of your gaps, right?
Yeah. Well, and you mentioned, obviously, that question was focused around what types of technology in particular could banks sort of take to insulate themselves. But then, you mentioned that, hey, if you insulate one bank, the fraudster is just going to try and go find another bank. So that sharing of information is incredibly important if you can sort of create a consortium among at least, the majors, and then hopefully have that trickle down to some of the more regional banks. There was a question that came in during that response that I thought was actually pretty timely. So rather than waiting until the end, I kind of wanted to throw it in here and just mention it to you, Kerry. So the question itself was, is the rise in check fraud also increased by FI's drive to automation and away from customer service driven to ease the ability for check fraud to occur? And I think that's interesting because obviously, you mentioned at the very top of that sort of response that, while checks may be declining in sheer number, the dollar amount is going up. And I'm thinking about myself going, yeah, the only time I write a check now is if I hire a contractor to come, build something in my backyard that's $1,000 and he only takes cash and I don't carry $1,000 in cash around on me. So now I'm going to write a check to that guy. But I assume when I give him the check, it should be safe because he's just going to go deposit it in the bank. But maybe he is taking it via a mobile channel or doing some other way that he's actually depositing that bank. So are there ways to, does it change because banks are, and to this question again, because banks are driving more towards automation and those types of processes versus it being that in-branch heavier touch model?
I don't necessarily know if it's directly tied to that, right? The more you have a relationship with a customer, the better protections you're going to have. So relationships important. We all know that, right? Drives for financial institutions, drives share of wallet, drives improvement in customer satisfaction, their ability to stay with you longer, all of those things when you have a really good relationship with your customer. I don't necessarily know that it's force or push towards self-service. I think it's around the balance of trying to make your customers experience good, how they want to bank. And through that, a lot of those holes, risk holes, right, of, I can take a picture of a mobile check and it doesn't have to be my check and I can deposit it and it's going to fly through the process, be posted to my account. I can withdraw that money. And then when it clears, the other institution's going, wait a minute, you didn't validate that this was the person that should have, it was a stolen check. So to drive some of the customer experience and ease of use, some of those protections that would be there if I was walking into a financial center to talk to someone or a branch may be being bypassed. So that's why I said you got to consider there's ability to do that, right? To protect that and validate that and catch that. But there's technology integration and expense and investment that you got to do to do that. So as you step away from relationship and more branch traffic, you got to think about how do I replicate that experience in my other channels? And sometimes that doesn't get replicated to reduce the risk. Maybe the customer experience is as easy, but the risk elements are gaps in that. Trace, in some of your interviews, have you seen kind of similar?
What struck me about the question is I would actually take it in the polar opposite direction. And I would say that check fraud is a problem because of the lack of automation. In other words, I look at the process. Detecting check fraud is a remarkably analog process. I mean, you're dealing with an analog instrument. You're having to look for discrepancies on a piece of paper, and that's exceptionally resistant to automation. Not that I mean, there's clearly a lot of opportunity there, and I think there are a lot of financial institutions out there that maybe haven't capitalized on the opportunity to automate check processing more. But it's also one of the most resistant things in banking to automation. I also think of the process of the settlement process, also not a terribly automated process. The recovery process, fabulously not automated.
Which is why you hear those stories about takes 9 months to get my money back. Yeah, exactly.
Yeah.
is very difficult. That's right.
Yeah. Well, and it's funny, another question actually popped in, and I feel like Trace, you just answered it while it popped up, which was, does the current ATM and remote deposit technology identify altered checks? I think we know that it does not, right? That is a manual process on the back end, somebody having to go in and take a look at that check. Best case scenario, the person is good enough as an individual to catch that. But realistically, there is, to your point, not a lot of automation, or people at least using some of the newer technology, the OCR technology and some of the comparison technology to really look at those checks and find those alterations. They are relying on humans, which we're okay at. So Trace, let me ask you another question, and this is one where Kerry sort of mentioned, rails earlier about payment rails and those kinds of things. I think when we look at fraud trends and associated with different payment types, right? Are there channels that fraudsters are gravitating to? Because I think, again, about the example of me having to pay somebody $1,000, can I do that via Zelle? Or if it's $10,000, or if it's a much larger thing, and again, that contractor's only taking cash and I don't carry around a suitcase full of cash, like that check may be my only option, but are there other fraud trends or other payment types that fraudsters are also gravitating to?
Oh yeah. I think to oversimplify it maybe a little bit, fraudsters, this is really building on what Kerry had mentioned earlier. Fraudsters are particularly drawn to the path of least resistance. They're drawn to things that are easy to execute and that don't require a great deal of, we'll say, technical proficiency. And when I say that, it's not that, I don't mean to say that the fraudsters aren't technically proficient. They absolutely are. I mean, the whole adage about fraudsters becoming more and more sophisticated over time is absolutely true. But the numbers game of it, when you look at just the sheer volume of fraud attempts, they're going to go after, again, that path of least resistance, 7 days a week and twice on Sunday, rather than going after the much more, sophisticated, technically proficient kinds of fraud. They tend to want to get the money from the victim and into a place where they can control it as quickly as possible. So that for that reason, they're particularly fond of faster payment networks. Something on the order north of 90% of authorized push payment fraud in the United Kingdom happens on their faster payment service. Almost virtually none of it happens on their slower payment rails. And that's because they want, again, one of their primary objectives is to get it from the place where it's not secure, again, from the fraudster's perspective, from a place where it's not secure to a place where they can control it. Curiously too, and this was revealed by a study by Vocalink several years ago. They monitor fraud on that faster payment network in the United Kingdom. They did a study that showed that the fraudsters were moving money as many as 7 times a day on average. Once they actually committed the fraud and stole the money from the victim, they're moving it on average about 6 to 7 times in a day.
Wow.
Which that always tickled me, because anyone who's managed fraud knows that it's exceptionally difficult to track the movement of money after it leaves the bank where it was stolen from.
Yeah.
So they really only need to move it like once or twice, but here they are moving it 6 or 7 times and getting it effectively to a place where it's safe from recovery efforts. So they also prefer digital channels pretty substantially, and that's again because it offers a lot of anonymity, and repeatability. So you can come up with means of automation in automating their attacks and in repeating them over and over again, because there's another old saying that the fraudsters can try 1,000 times and they only have to get it right once, whereas the banks have to get it right every time.
Yeah. Yeah, it's interesting to sort of think about, and by the way, forgive me for almost making a really bad pun about tracing and trace, and you would know a lot about tracing. It was I couldn't get it to work in my head, so I'm just gonna leave it out there for the world. There was a dad joke in there somewhere that I missed, but I will tell you that in terms of kind of the way that banks are prepared for it, I'm kind of curious. We see fluctuations in, and you talked about this earlier, in where they focus. Do you think that these financial institutions are really prepared for this sort of rise in fraud? And really, I guess that's a question for both of you. Is there a way to bring back trust in consumers that this particular rail is still safe, or should they be pushing customers away from this rail, or what's the balance there in terms of how financial institutions should be sort of dealing with this? Are they prepared for it? And if not, should they be pushing customers away from this particular rail?
It's a really interesting question. And I don't think there's any really easy answers to that. I think there are a few different considerations to make. As to the safety of the rail, every rail has peril, right? Every rail has risk in it. And it's very difficult to say that, one rail is riskier than another's. It's the nature of the risks are different. So I think in order to sort of optimize the trust relationship, I think the first and foremost thing that needs to be done, and that's not necessarily being done as well as perhaps it should be, is having some adult conversations with your customers about what those risks are. So there has been a tendency forever to not discuss the potential risks of payments or of online banking or of mobile banking or so on and so forth, because there's understandably a concern that by bringing these topics up, these sort of negative aspects of these conveniences, that you might scare customers off, make them nervous. And so you avoid talking about it altogether. And I think that's a mistake. I think customers and consumers in general are receptive. I think they're actually much more receptive to having these kinds of conversations than they're given credit for. And in fact, I would argue that they're maybe a little bit, what's the word? There
Like
may
an
be,
appetite.
well, I think there's some distrust has seeped in, or mistrust has seeped into the relationship because they feel like they're being lied to, or that financial institutions aren't talking to them honestly and frankly about the risks. And I think there's actually some truth to that. It's more of a sin of omission than anything, and so I think it's important to have those kinds of discussions. But I think it's important to have them, obviously in a way that is balanced and measured and careful. The last thing I'll say about this is, again, if you look at the dynamic in certain markets, it's a little different. Like, again, I hate to bring up the United Kingdom here, but it's a good example. They're dealing with a multi-year scam epidemic there, and for the longest time they were like every other market. They chose to not discuss the risks of faster payments and other kinds of rails that the fraudsters were targeting for authorized push payments. That has been put by the wayside because the losses got to be so great that they saw no other choice. So now you see nationwide campaigns that are as polished and thoughtful as any sales campaign you've ever seen, that talks specifically about the threats and the risks of scams. Now, as scams, I think you could apply the same thing to check fraud. You could apply the same thing to just about any other form of payment that is subject to fraud risk.
Yeah, this actually brings up an idea in my head from a conversation that I had yesterday. So I was talking to a woman who actually runs a smaller credit institution. So, you know, the problem with her particular credit union is that she has a very aging populace, right? It is, you know, and I'm not gonna, I definitely am not gonna name names, but she had sort of mentioned that their largest loss in clientele is actually from expiration, is probably the nicest word to put it. So there are folks that are not willing to migrate to other payment platforms or payment rails as it is as well. I'm curious, that's one particular one, and I think she mentioned they've got about 30,000 active members, so it's not a large institution. But then Kerry, you coming from Bank of America in the past, is it different? Is the trajectory different for different institutions based on their client base? Does somebody like Bank of America have to just assume risk is uniform across all different types because we've got a lot of digital natives coming on board to Bank of America's platform? Or Bank of America, I assume, also has a very high rate of aging population. I'm a Bank of America customer, and I'm getting older. So those kinds of things. I'm just, I'm kind of curious if there's a difference between, where the risk is involved and where they should focus based on their client base.
Yeah, I won't talk specifically about Bank of America, but I'll talk about large bank, small bank, right, to regionals. They all have their different, approach to their client base and some of those things. What I'll say is, large institutions, it's an opportunity as well as a challenge because they are so large, right? So it's that wide broadcast of, they've got all of the different dimensions of customers that they have to not only engage with, but help support their financial wellness. And so you have to have a multi-pronged approach to having the trusted partnership. I think Trace is right, communication, right? Having that open dialogue with your clients is absolutely important to build trust, because it is a partnership, right? I'm giving you my money because I trust you, but at the end of the day, it's just as much my responsibility. I think, one of the things that, institutions, banks need to do in general is just kind of have that good conversation with their customers that says it's your money just as much as you're putting it in my bank. And so you have some responsibility too to check your bank accounts and, make sure you didn't have fraud on there and be smart about your passwords and all of those things. And when you're considering, I had a conversation with someone that uses, pay me by Venmo or pay me through Zelle. And I'm like, well, I want to validate it's you before I send you that money. Because if I send it to you and I send it to the wrong person, I can't get it back and you won't get your money from me again. Right. So we're going to go through the steps. And she's like, oh, I didn't realize. So there's a gap in understanding, like Trace was saying, about the different payment methods that are out there, but the benefits, because there's a benefits, right? Check is friction. I have a piece of paper. When it clears, I have proof and evidence. Real time, is fast. So there's benefits to all of them. Customers need to know how and when to use those types of payments for the type, Be smart about the money they're sending, why they're sending it, and the risk about the dollars, A $10 check versus a $10,000 real-time payment are two different types of risks. So I think there's that element of it. The other thing is banks they're obligated, they're expected, they should be the trusted, place that you put your money. So they have some obligation to protect all of those rails to the best of their ability, which sometimes means you have to invest in the ones you don't really want to because you'd rather, invest in the shiny product. But at the end of the day, both of those sides of the coin are going to impact your customer experience. So which one are you willing to take the risk on, So good press, bad press, Hey, it took me 9 months to get my money back, or good experience, bad experience. And in a bad experience, I could be impacted by fraud. But if my bank does a really good job of educating me, hey, I've been impacted by fraud. Adam, probably you have an experience you could share. Trace, you probably have one. But the way that your institution handles that, and helps you through the process and trust that you're right, the truthful guy, and how to discern that's kind of a challenge for them as well. But helping you through that, because they have your money, right, and they're being responsible like you are, is also the other side of it that's very, very important. And I don't necessarily know, to your point about where they're investing, fraud detection is one of those. Claims, and like you said, the day two, right, those processes that happen when there is an exception probably need to be looked at and considered for technology opportunities as well. The more information I have up front to help my customer on a fraud experience or detection or prevention, the better off I'm going to be across the board in all of my channels. So I think it's kind of a little bit of both, right? Customers need to be responsible, they need to be educated, we need to trust that they know how to use the rails, and we need to educate them how to do that. At the same time, banks need to invest in protecting the money that they've been entrusted with.
I think that's a really valid point. And I think you've mentioned it a couple times now about, there are oftentimes the trade-offs of upfront investment for future gain against fraud or for, customer experience and sort of keeping your client base happy. So to that point, and to bring it back to checks then, so, and I'll leave it open for both, but I'll aim at Trace first of, where do you see check fraud, since we've, obviously on that topic today, that's the point of the webinar is, where is that going over the next couple of years? Because we, again, from 2020, we're seeing this huge increase. It's basically doubled in the last 2 years. Is check fraud going to continue to increase, especially if we're not seeing, the right types of technology investment? If it continues to remain, as you mentioned earlier, the third priority or the fourth priority of the banks, does check fraud continue to increase at the pace that it's increasing at now? Does the pain have to get worse?
The only thing I've got to go off here is, again, what we talked about earlier with regard to the consumer sentiment about economic conditions. And, if that is the predictive canary in the coal mine of where things will go, I think it's going to be a while before things get back to normal. What that while means is anyone's guess. It could be another year, it could be 2 years, could be 5. I doubt it's 10. But it's I think it's going to remain a significant problem for so long as that consumer sentiment of economic conditions remain sour. With regard to what can be done about it in terms of the detection side of things, I think there's still a lot of room for improvement. And I think generally speaking, like it with almost all types of fraud, a layered defense is the best defense. And I think there are a number of FIs out there that maybe have not invested as much as they could in certain types of certain layers of check fraud defenses. And so I think there's room for improvement there. I think the good news is that we're beginning to see a little bit more in the way of innovation on the supply side of the market, which is great. And I think that will help quite a bit. I also think that we're seeing some, in terms of the investment decisions and priorities that are being made, things are moving in a positive direction. So one example of that would be, one of the biggest problems with check fraud detection is false positives. If you only have a legacy mainframe-based check fraud detection system, you're dealing with false positive rates of in the neighborhood of 100 to 1 or higher. And that's very painful. That's very manual. That's very costly. So by adding in some additional sort of model-driven filtering agents that are particularly engineered for reducing those false positives, that can get you down pretty substantially. If you add in an additional layer of image analysis and other kinds of really helpful tools in that space, you can get it down even further. I mean, best practices I've heard are, well, realistically, I think around 20 to 25 to 1. I've heard it much lower than that, but haven't independently verified those. So,
yeah. Well, I mean, even at 25 to 1, you're talking about a 4x reduction. So I mean, that is a huge improvement. really interesting to me about that commentary, and it's a side thread, but just thinking about talking about all of the types of advanced technology being used on something that is such a, a legacy product and something that has been around for so long. So, Kerry, I do want to have you speak to that same question, but I'm going to throw a bit of a twist into it just because of that side thread. So one of the other advances, right, that is, and I got to use Trace's quotation fingers when I say advances, but, thinking about the dark web and sort of the marketplaces that are now out there and the speed with which, because we touched on a little bit with social media and those kinds of things, but the dark web marketplaces with the tutorials and all of those kinds of things, if banks aren't willing to invest now, and this is part of the reason I'm curious about Trace's timeline of is it 6 months, is it a year, is it 5 years, how much more pain really happens if the advances on the fraud side of the house and those dark web marketplaces and all of those things continue to advance as rapidly as they are, as people, and I'm not going to throw AI in here for no reason, but there are ways to sort of correlate a lot more information to create template style attacks even on checks. All of that stuff seems to be advancing faster than banks are adopting the technology to fight it. So that's, I guess, where my question back to you, still same question of, where do you think over the next couple of years check fraud is headed trajectory wise, but throwing in that piece of sort of the technology being used on the fraudster side, but maybe not on the bank side as quickly flavor.
Yeah, I would agree with Trace. I don't think it's going anywhere, right? Even if there's a long tail to check, right? It is the path of least resistance. We know that check fraud could be tied to, right, account opening mules. I mean, it's tied along the way, right? So I do an account takeover, then I start writing checks, then I clear the account, so on and so forth. So there's lots of things that are interconnected, but checks are going to be here for a while. We know that, regardless of the tail. And so if there's even a small amount of volume and you're losing a lot of dollars, you better consider, right, doing something about it. So I think it's important to invest. I think it's important to invest in the right partnership. It's not just a technology, but you want a solution provider that's thinking of all of the interconnections of bank financial potential fraud, thinking about check, and like you said, using the check itself to glean intelligence that sometimes people forget that is there, and writing the template itself, all of those things to drive false positive rates down so that you can actually manage it from an operations. I mean, most on the, when you think about straight through processing where we were when checks were actually all manual to where we are today, it's probably in the 80 to 90%. We still have a lot of manual processes in fraud detection. How do you change fraud detection, that word detection, into prevention? I think the right technology, the right uses of the information, and then you have got, we knew, right? We have got to, and the industry has got to start thinking about solutions that bring all the signals in across, right? The compromised data that's out there, compromised account data, compromised checks that are being sold, all of those things to bring that in to drive false positives down too, but also improve detection and prevention so that you can start saying, hey, my customer has some data out there. I can take some preventive steps before I even start taking the trickle down losses, right? And even they've got to protect their own check stock, official checks, all of those things. So you've got to start using the technology. Capabilities are vast, OCR and some of the read capabilities on that. Use all of those intelligence, to generate the right information, to make good decisions, timely decisions, and not have to throw a significant amount of operational expense behind that to do it. But check's going to be here for a while, until we solve this commercial, right? Commercial kind of check volume and all those things. You got to plan for it. So you better protect yourself, or you better protect your customer. Otherwise, you are going to, right? As an institution, you are going to be the path of least resistance, and no one wants to be that, right? At the end of the day. So you got to balance kind of what am I willing to lose? Am I willing to lose money? Am I willing to lose customers? Am I willing to lose my reputation over a technology investment? And then the industry's got to partner more on that communication, because they're going right from bank to bank to bank. They're crossing multiple. That UK example, they're doing the same thing. They're opening 7 accounts. They're using check. They're using RTP. Maybe it's not as sophisticated as the 7 times to withdraw that money, but they're using those same kind of things to take as much advantage of the marketplace. I'll call it, for them, it's a marketplace, as they can, to win, get rich, whatever those terms are that they're using right now to kind of perpetuate the challenge that we're seeing in check. But it's going to be here. So the question is, are you willing to take the risk? I think that's what every bank needs to ask, across the board, their executives, their leaders. Are they willing to take the risk to their company? Are they willing to take the risk for their customers? Are they willing to invest? And sometimes it's really hard to do. Get it, been there. But if you have the right champion, and you're tying all of the connections together, you have a better opportunity, and I think it drives a better customer experience at the end of the day. And you can have that conversation with them about how I'm protecting you, right? This is a protection that we're doing to help you, because we are your trusted money institution. You have your money with us, so we're going to do this, right, to help protect you.
Yeah, and I think, there's a couple of things that you mentioned in there, in particular, bringing in information from other banks, that proactive communication that Trace talked about. If you do see fraud signals, alerting them to that and maybe telling them, hey, here are some things that we're already seeing for you in advance of the fraud happening, can be really, really helpful. I will mention we are now we're actually just past the 10-minute mark remaining in the webinar. We did want to open it up for questions. I know I've seen a couple of them piling in, but the conversation was going so well, I did not want to interrupt. So I will throw these out as quickly as I can. We'll just see which ones we can answer very quickly in the last few minutes. For any other questions that come in that we don't get to answer, I will mention that we will send those out along with the recording afterwards. So folks, we will try to answer your questions if we can't get them here as well. So where's the first one? Improve check fraud prevention in branch. Are there opportunities to improve check fraud prevention in branch? So we obviously talked quite a bit about technology, but I think a lot of that was focused on the mobile side of the house. Are there also opportunities to improve check fraud prevention in branch?
Yes. Whatever you're applying to your mobile, your ATM, right? Those other channels, you should be able to, the capabilities out there in the industry, you should be applying similar, right, technologies to that branch cash out issue that I know is out there, right? And the same validation, you just got to find the right partner that can, make sure that you're not impacting your expectation on, how much time your customers are spending doing the business of, writing, cashing, depositing checks. But absolutely, they should be applied, in my opinion. Maybe not every deposit, maybe not every transaction, but the opportunity is there. And I think people need to consider how they're using image in their branches to take advantage of some of that fraud detection capability.
Yeah, and the one other thing that I'll mention on that, just knowing it from my front too, is, a lot of the times we rely on the technology of the camera that is on the phone for mobile capture, and that gives us the ability to do a lot of scanning of those documents. A lot of the AI is defined around that. But again, to Kerry's comment about good partners, hopefully you've got a partner with you that's using that same technology for in-branch types of technology, things like Panini scanners and that kind of stuff that we know are legacy technologies that are also already in branch for scanning items. So I'll mention that as well. And then what is the biggest challenge for financial institutions with implementing new technology? This might be a great one to wrap it up with. What's the biggest challenge at a bank to get new technologies in? So we've talked about, hey, you need to invest, but how do you kind of overcome what might be some of the hurdles at those banks?
Hard to distill that one down to a single thing. Integration is a really big challenge because anytime you're going to deploy a new technology, it's going to have to be integrated to, especially in fraud, with a variety of other systems, and that plumbing that's a big challenge to get over. It's gotten a lot better, but a lot of those are just around what we call data wrangling. It's difficult to wrangle the data. So that's certainly a big part of it. The data sharing is another one that's kind of a recurring theme to me, especially with regard to the last question, what more can be done in the branch and for cash out? Well, if there were a really robust data sharing capability that banks could use to try to determine more about who's negotiating this, that would be very helpful. But you've got a lot of hurdles. a lot of restrictions on what under what scenarios you can and cannot share data, and so that's a major obstacle.
Yeah. Kerry, any other thoughts? I mean, information sharing being one of the big ones. Again, we've got 4 minutes, so I'll give you 2 or 3, just if there are any other sort of hurdles that our folks should be aware of, or at least that maybe we can help them be mindful of as they start looking at new technologies.
I think if you're having that challenge on technology investment, you definitely want to consider thinking about how the customer experience is impacted, right, positively or negatively by not doing the investment. The other hurdle is time. Because right, you're in a regulatory, kind of institutional kind of framework, you got to think about the time to implement, and consider that you want to go as fast potentially as the fraudster on the other end, and what does that take from a nimbleness perspective, which can be a challenge both internally and externally, but you want to find a partner who can do that, because you want to have someone that can help you with the next challenge and the next challenge, and at least keeping up with what's going on in the industry to help you protect you from that next big loss. So those are some things I would say, when you're thinking about that, besides just integration, like Trace said, that takes just a significant amount of time to do the complexity.
Sounds like SaaS-based applications might be a good place to start looking. Yeah.
Maybe. It's a possibility. Yeah, that's a good one.
Yeah, apologies. I'm in marketing every now and then. I have to throw stuff like that. So, honestly, Trace, Kerry, thank you so much for joining us today, for adding a ton of insight. For me personally, it's been a really interesting conversation. I feel like I'm going to walk away smarter, which is not hard for me, but it has really been a great conversation. So thank you both for your time. For everyone that joined, we will get this wrapped up, including additional questions that we will get answered, and we'll package it up and send it out to everyone. So thank you for spending some time with us today.
Thank you for hosting, Adam. Thanks, Trace.
Enjoyed it.
All right. Bye.